Good evening, everyone. I'm Vaishnavi Vaiti from Kiran Advisors. Welcome to the virtual roadshow of Emerald Tyre Manufacturers Limited. Today, we will provide a brief overview of the company and its innovative business model. Emerald Tyre Manufacturers, established in 2002, is one of the largest manufacturers and exporters of off-highway tires with a special focus on industrial tires. The company is also the most preferred OEM supplier for its product range in India. It offers a comprehensive range of tire and wheel solutions across various sectors of material handling industry. Emerald Tire Manufacturers Limited has maintained a dominant presence in both domestic and international markets for more than 2 decades. From management team, we have Mr. V. Tirupati, founder. Good evening, sir. Welcome. Sir, you're on mute. We also have Mr. V.T. Chandrasekharan, Chairman and Managing Director, and Mr. Ishwara Krishnan, Whole-Time Director. Good evening and welcome. We have Mr. V. Krishnaraman, Chief Executive Officer, and S. Shankar Ganesh, Chief Financial Officer. Good evening, sir. Welcome.
To all of you, Mr. Shankar Ganesh.
Good evening, sir.
Good evening.
We have Mr. M. Murli Sridhar, Account Manager.
Good evening to all.
Good evening, sir. Welcome.
Yeah, thank you.
From GYR Capital, we have Mr. Yash Jain.
Hi all, good evening.
Hello, good evening and welcome. From Aksan Capital Advisory, we have Mr. E.S. Rajnikant, Managing Director.
Happy evening to all.
Good evening, sir. Welcome. Now I hand over to Chandrasekharan, sir, to give a short intro about the company and its future plans. Over to you, sir. Thank you.
Thank you, Vaishnavi. Good evening, all. It's a pleasure to invite you to the IPO roadshow of Emerald Tyres. I'll give you a short background about the company. The company was started in the year 2002. It's about 22 years now. We are basically into the off-highway tire space. Categories of tires. One is the on-the-road tires, which are the passenger car and truck tires. The others are called as off-highway tires, where you have agricultural, mining, construction, and those kind of equipments. Emerald Tire specializes in material handling equipment tires for forklifts, ground support equipments at airports, seaports. These are the areas where we concentrate. It has been right from the beginning. We have been concentrating on this area. These are tires which are used in the logistics space. So as long as you have goods to move, as long as things have to be shifted from one place to the other, whether within the factory or outside, transportation, have manufactured by Emerald Tires.
I
So
think
this
we have some
from
network
it
issues.
has been a long journey. Audible?
Yes, sir.
Can I go ahead? Yeah.
Yes, sir.
We are in this space for a very long time. We are dominant in the
Sorry, sir, your voice
also
is
in the
not
English
clear.
market. In the
Sir, your
domestic
voice
market,
is not clear.
almost all the OEMs in India, OEMs are into manufacturing of forklifts. We supply tires to them. We are also very strong in the domestic replacement market. We have our offices in the major cities and also the industrial areas. So my colleague Mr. Ishwar takes care of the domestic market. And in the international market, we are predominantly into the replacement space. For all these years, Emerald has had its, started with some of customers who want full tires. Then subsequently, we started manufacturing. We had a warehouse in Europe and in the Middle East. So there, we started stocking tires and supplying to the end users. In the recent past, what we have seen is that post COVID, we have seen a shift. There is a lot of demand for industrial tires, and there is a lot of demand for tires from India in this segment. There are two things happening. One is that there are sourcing companies which are coming into India, and there are multinational companies who are setting up manufacturing units here in India. So both ways, the sourcing companies try to procure these tires in India and supply to the international market, and also most of the original equipment manufacturers are coming in India and setting up shops in Pune, Bangalore, some in Chennai, and some in Gujarat. So we look at it as a very promising industry to come up. We are in the right space and at the right time. We are expecting a good movement forward. That we see a good movement forward. We thought that this is the right time to expand. We are going ahead with expansions in our plant and machinery. So from this IPO, from whatever we get, the money we raise from here, we will be investing in plant and machinery. Mostly, we will be putting up a state-of-the-art mixing plant. We will also be increasing our capacities in the solid tire and the pneumatic tires. I didn't talk to you about the kind of tires we do. We do something called as solid tires, which are airless. And in the pneumatic tires, these are the same application, material handling, but we also, in some areas they use industrial tires. So we have both these kind of products, and on top of it, we have something. Mr. Krishna, I'm explaining about the product in detail as I get my team with Mr. Krishnaram and the Ishwar Shankar, we all look at it as a very hard time to get growing, and that is why we are there with you. I now hand over to Mr. Krishnaram to take over and make the presentation.
Thank you.
Thank you, sir. We will start with the presentation.
Yes.
Over to you, Krishna Raman.
Yeah, thank you. I think this is just about, we would like to give a small introduction about the company. The company is in business for the last 20 plus years. We started in 2002, and our team size is 240 plus. We are located in a 10.05 acres land of manufacturing facility. And I think in the year 2024, our RONW is 19.8%, ROC is 14%. In the year 24, our revenue clocked 170 crores and an EBITDA of 29 crores and a PAT of 12.14 crores. And just to give you an idea, we provide the complete end-to-end solution for the industrial tire sector, which is basically involved in material handling. The brand is very well known in India and abroad for its quality, technological superiority, durability, and adherence to high quality standards. We always focus on the customer as the central point of all our activities. Next. I think we would like to tell the company's vision is to be a trusted off-highway tire wheel solution provider. And we prefer to, the day we started, we have decided to go global because there is a tremendous potential for this product. And being geared with excellence, we thought we will be able to make a big foray into the market. Our mission will always be a customer-centric organization, prioritizing customer needs, consistently enhancing the value for all stakeholders, fostering customer-centric approach, and focusing on shareholder satisfaction. Our goal is to rank one among the top 5 global players in our product segment by striving through excellence, innovation, and by focusing on customers. We are confident of achieving that. Next. We would like to take you through the milestones that we had from 2002 to 2024. The company was inaugurated on 20th July 2002. And from 2002 to 2006, we expanded our solid tire capacity. Then parallelly, we started in the year 2007 to start a plan for wheel rims, because tire and wheel go together. Then we found out it's not just solid tire. We need to get into other segments of industrial tires. And one of the major area is industrial pneumatic. Pneumatic tire means the air-filled tires. And this project, along with tube and flap, was inaugurated in the year 2008. Thereby, we became a one-stop shop solution for all the customer needs. In the same year, we also opened a warehouse and sales office in Europe and Middle East. Then we expanded our capacity for industrial tires in the 2011. Then we started focusing on niche area like the ground support equipment tires for the airports. And this is globally a scalable business, and Emerald is fully entrenched into it. Then we started focusing on the construction segment where skid steer plays a very, very big role. These are called skid loader tires, and we started becoming very prominent in that segment. In the year 2015, a culmination of all these things, we got the President's Award. And not to speak about it, year on year, we have been getting awards from various institutions for our performance and our market reach. In the year 2019, we started working towards the US market, which by and large is one of the biggest markets. And then we expanded. This forced us to expand more and more into industrial pneumatics. And that's where the off-highway tire starts its origin. In 2023, we started expanding. And in 2024, as we stand today, we are staring at a big market potential, not only because of the India's economic growth, but also the world looking at India as a stable economy for investment, and the China plus one is really a motivation factor for us that we move forward from 2024. Next. I think reliability, Emerald has always focused on quality as the center of all our activities. We have the latest testing equipments to test the tire, and we have a very advanced lab to check the quality of materials. And we also have a lot of global consultants who come and actively help us in improving quality. And I think, not to speak of it, our employees are fully into total quality management, where they represent Emerald in various quality forums and have been winning accolades year after year. Next. The essence of group, the vision of the group is that we need to be an environmentally friendly company. The first thing, Tyre is black, but we provide a completely safe green to the end user. We integrate a lot of our efforts towards making the product green. We provide very eco-friendly inputs in making the tire. We have an in-house mold shop where we can design these sizes, and we are known for optimum consumption of energy and water. These are two things which Emerald focuses in terms of achieving the lowest energy cost per unit of the product, and also working towards zero water discharge. And I'm glad to tell you Emerald complies with all the environmental regulations, and we are an ISO 9001 as well as 14001 certified company, and we are also REACH certified. It is an European standard which we follow in making all our products, which makes the product environmentally very safe. Next. These are the certifications of both the quality standards as well as the environment management system. So any product that comes out of the factory is safe and is environmentally very, very suitable for the health. Next. These are the awards that we have been getting year after year. Next. These signify that the company has been working towards excellence at every point of time and has been in the forefront of taking this organization forward. Next. Industrial tires are generally used for, they are called application engineering tires. If you don't know your customer and if you don't know the application, then you are likely to be a failure. Emerald from day one has always kept customer as the focus, and being close to the customer has been the vision of Emerald. So very early in the journey of the company, we decided to open in one of the most advanced markets in the world, which is Europe, and in a place called Belgium. And today, this has paid rich dividends because the European standards and the way of looking at quality has completely been ingrained into the product of the company because of this very major step. And then we moved to Dubai, and Dubai, Middle East, and Africa are the emerging markets. So in Dubai, we kept a major thrust towards development of this product, and it is paying very, very rich dividends. I'm glad to tell you, majority of the airlines in the Middle East, they use our tires. Next. This is to tell you about the quality. Emerald's R&D department constantly focuses on advanced equipments to test the tire. You know, garbage in, garbage out. You have the right material, you get the right product out. So Emerald always focuses on the quality of the inputs that goes into a tire. And at every stage, we have quality standards to see that the ultimate product actually reveals the real vision of the organization in performing better. Next. Manufacturing. Emerald has its integrated manufacturing facility near the port city of Chennai in a place called Dumadipundi, which is about 40 kilometers away from the airport. The company manufactures a wide range of off-highway tires and uses the best inputs of raw material. The company ensures that the products meet the global standards and always keeps ahead of the technological advancements. It promotes cost efficiency. It's streamlining its operation to provide flexibility in production, because this is a product where you have a number of SKUs for the ultimate customer. So unless your manufacturing is flexible, this cannot happen. So manufacturing is the heart of Emerald, where excellence in manufacturing is constantly strived to provide the ideal product mix to provide complete tire wheel solutions. Next. This is our registered office in the Porur Gardens, which is on the National Highway, accessible to all the locations, be it the airport, be it factory, and it's an ideal location for anybody to come and visit us. Next. This is a small view of the factory. The factory is located on a 10-acre plot and with a constructed area of something close to about 200,000 square feet, which has 3 divisions: the solid tire division, the pneumatic tire division, the wheel and tube combined, and the mixing unit. So you have an integrated plan from end to end. The entire product is manufactured in this ideal location, which is very close to the port and also accessible by railways, road, and all those logistic movements is highly facilitated by this location. Next. Just to give you an idea of the capacity, the installed capacity and the utilization. As you could see in the year 2024, we were having a 70%, 70.89% of capacity utilization. In press-on band, the solid tires and press-on go together, because press-on band is nothing but the radial version of a solid tire. So combined together, we almost have a utilization of close to about 70%. In the pneumatic tire, the capacity utilization in 24 is 90%, and in wheel rims 62.32. In the current year, up to July, we have almost been able to keep it up, except in industrial pneumatics where the volumes are growing and we are constantly keeping pace with it. Next. I think we got introduced to all of us. Mr. Chandrasekhar is the managing director, and Mr. Ishwar Krishnan below is the whole-time director, and myself, Krishna Ramu, I'm the CEO of the company. Mr. Shankar Ganesh is the CFO. The company secretary is Ms. Divya, and we have 3 independent directors. Ms. Priya Vedavalli, she's an economist, and she adds value to the organization in terms of identifying the trends of the global economy and guiding us where to move forward. Mr. Krishnamurthy is a very seasoned chartered accountant with over 20 years of experience, having worked in various organizations. He carries with him a lot of knowledge to guide the company on the financial aspects. Mr. Narasimhan is a quality expert. He has been touring across the world, preaching management. Part of he had a very long stint in the TVS group. Now he's here to add value to the organization, to take the organization to the next quality levels. Next. Just to give you an idea, solid tire is one of the important areas of material handling. The basic advantage is solid tire provides a puncture-proof, property to the tire. It's a full mass of rubber, so it is made in different quality. For example, if it's a round-the-clock application, we have a super premium. Then we have a premium. Then that's a standard, which runs in standard operating conditions. You will be glad to see your yellow tire. It's called a non-marker, where instead of, it is a very special tire which is used in food industry and pharma industry to be environmentally much more safe because it doesn't leach carbon black. Then you have the industrial pneumatics, which are the pneumatic version of the industrial tire. You have the wheels, you have the press-ons. Press-ons are nothing but a portion of the rubber is replaced by steel. So steel bonded with rubber is called press-on band. So we have the complete range that is needed for a customer. Next. These are the different brands of solid tire: Empower, Empower XT, Drexter Gold. Depending upon the application for which I explained to you, these are application engineering tires. So based on application, we provide the right tire at the right price of right quality. Next. Press-on bands, as I explained to you, are the radial version of a solid tire, where you replace almost 60% of the rubber with a steel band, thereby reduce the weight to provide low rolling resistance and energy efficiency to the forklift. So Emerald is one of the largest manufacturer and exporter of these tires, where across the world, the ports in various locations operate with these press-on bands, and we have a dominant presence globally in this business. Next. Industrial pneumatics, as I explained, these are air-filled tires, which are used in forklifts, in ground support equipments, in ports, in skid loader, in implement tires, as well as in winter. And we also provide inner tubes for the tires. We make both tubeless and tube. Wherever tube is required, we make the tubes, because the tube plays a very big role in retaining the air and thereby giving performance to the tire. So we provide an end-to-end solution to the customer. Next. Next. These are wheels form a very important part of the product, because the customer wants the tire and wheel assembled and delivered just in time. Probably has been focusing on this value to the customer all the time, be it a product, be it service, be it the combination of it. We always work towards providing end-to-end solution, and the wheel is one of the very important parts when it comes to a vehicle, and Emerald provides the complete solution. There are areas where the wheels themselves have to be fabricated. They are called direct bonded wheel, where you rubberize the wheel directly and deliver to the customer. And then we also give our customers additional support in terms of polyurethane wheels as well as multi-piece rims. Next. I think, as I told you already, that we provide optimized tire solution with the integrated fitment service also. One of the important areas, customer has a tire, a wheel, but he wants somebody to fit it, because industrial tires are very difficult to fit the tire, because a solid tire is a full mass of rubber, and if you need to fit a wheel into it, you need to have a fitment press. So Emerald is in its quest to provide end-to-end solution. It not only manufactures the product and wheel, it also provides fitment solution and delivery to the customer. This shows Emerald's commitment to add value to the customer constantly. Next. These are some of the applications in which our products are used. Forklift. Skid loaders are used in construction sites. Ground support equipment, any airport in the world, you need to move the cargo, and Emerald is in the forefront. Port trailer. These are trailers which are used to unload the container from the ship and to be delivered to the yard. We make solid tires of this high category, which helps the ship to unload faster and get to the yard. Then we provide winter tires because we supply across the globe. Lawn and garden is another very, very major focus area because all over the world, the lawn and garden rearing is becoming very popular. And again, in agri implements, in harvesting, in taking the produce, we provide the implement tires. And also, the tractor also trailer carries the produced product to the marketing sites. So this is just to give you an idea of where our tire applications come from. Next. And I think in terms of product, I think these are going to be the emerging products where we are involved, where the scissor lift and telescopic boom lift, these are aerial work platform tires. Then we are supplying to mining equipments, which work in deep mines. And then Ro-Ro trailer. Now, Ro-Ro trailer is a very special application because in Europe, they use inland waterways to transport the container. And the containers are loaded on a trailer and pushed into the ship and rolled out in another port when it arrives. So this roll-on and roll-out tire is one of the major areas where Emerald focused. And I'm glad to tell you that we almost supply to all the major ports in Europe. Then road paving equipment, PO wheel, road asphalt paver, finisher. These are all the end applications of our tires. Next. I think just to give you an idea, the product-wise, if you take the two major areas where Emerald concentrates is on solid tires and industrial pneumatics. Press-on band is an extended radial version of solid tire, and wheels go with both solid tires and pneumatics. So if you take the total product, we are evenly balanced. I think each of them contribute. For example, solid tire almost contributes about 50-55%, and pneumatic is closely catching up with that. Over the years, both the volumes will grow with the expansion of the both the economy within India and outside India. And the Emerald parallelly focus on solid tires and pneumatics continuously to keep pace with the market. Next. I think geography-wise, as you could see, the domestic market contributes about 22.52% and export contributes about 6.48%. Now, as and when the domestic market is growing, the export market will also parallelly grow. The idea is that we must be a dominant player in the domestic market, and with the OEMs coming inside, there are exciting times where the domestic market will grow further, and the overseas market with the capturing of the OEMs and with the product expansion, both will expand. So both domestic and export will keep maintaining the same pace as we move forward. Next. Just to give you an idea about how the off-highway tire market is, there is a very strong potential for this particular market because there is a lot of expansion happening all over the world. And we are looking at almost a 4.7 CAGR as far as the growth is concerned. And if you see, the applications are diverse. It's not only on the road. There are construction, agriculture. When the infrastructure grows, these tire potential will grow. Agriculture, mining, industrial sectors. There is going to be a lot of thrust on infrastructure development and mechanization. Then sustainability is very important, and Emerald focuses on lot of sustainable efforts. We are very much entrenched into our ESG focus, and all our products are eco-friendly. The aftermarket, the rising need for maintenance and repair. There is a huge potential in the after-sales market where the revenues are better, and the Emerald always keeps in pace with this aftermarket penetration through extensive network of dealers, fitment centers, and exclusive Emerald service providers. Technological advances are catching up. Bias tires offer durability. Radial tires provide stability and longevity. So Emerald is now well entrenched into the bias tires application, and the logical area of expansion will be radial tires. Economic drivers, as you are aware, more industrialization happens, more infrastructure happens. This particular product will always have a rising potential. Next. Indian market is poised for great growth because, as already explained by our CMD, there is a tremendous growth happening in infrastructure, with the government spending a lot of money on infrastructure. Again, globally, it's bound to improve because all the advanced countries, they are completely mechanized as far as all their off the road applications are concerned. So naturally, the demand is going to increase. Urbanization and modernization have become part of the global mantra. So this is going to further drive the requirement of the tires. Technological advancements in OTR tires. We are getting a lot of exciting developments in the OTR segment, where we are using sensor-based, the air inside the tire is remotely monitored and pumped to keep the tire in good state. They call it TPMS. And also the tires become more and more application oriented. And this can be seen from the various categories of tires which people use. And the regional developments is becoming very, very important. And you could see that each state competes with each other in growth. And that's going to be good news for off-highway tires. In short, this particular industry is on an upswing, and Emerald is going to catch up with the potential of this particular application of tire. Next. Financial review.
Yeah. Thank you, Mr. Krishnaram. Yeah. Next. Yeah, the total income in FY22 was 13469.67 lakhs, and it increased to 167.98.10 lakhs in FY23 to 171.96.84 lakhs in FY24. For the 4 months period ended, the total income was 6492.75 lakhs. The EBITDA increased from 1544.39 in FY22 to 2389.06 in FY23 to 2962.89 in FY24. There has been a consistent growth in EBITDA, and for the 4 months period ended, the EBITDA was at 1040.93. The EBITDA and the PAT was 484.62 in FY22 to 892.85 in FY23. It has nearly doubled to 1214.32 in FY24, and for 4 months period ended, it was 413.64. The EBITDA margin increased from 11.47 in FY22 to 14.22 in FY23 to 17.23 in FY24 to 16.03, that is for the 4 months period ended. And the PAT margin increased from 3.63 to 5.45 in FY23 to 7.10 in FY24 to 6.48 in July 24. Next. The profit and loss account consolidated. The revenue from operations as of July, it was 6380.33 lakhs. In FY24, it was 17098.74. In FY23, it was 16393.95. And in FY22, it was 13364.26. The total income increased from 13469.67 in FY22 to 16798 in FY23 to 17196 in FY24 to 6492 for the period ended 4 months period ended July. The EBITDA also increased from 1544.39 in FY22 to 2389.06 in FY23 to 2962.89 in FY24, and the EBITDA was for 4 months was 1040.93. Similarly, the EBITDA margin increased from 11.47 in FY22 to 14.22 in FY23 to 7.23 in FY24, and 4 months period the EBITDA was at 16.03. The profit before tax was 644.85 lakhs in FY22 to 1200.75 in FY23 to 1605.49 in FY24, and for the 4 months period, it was 550.51. The PAT was 484.62 in FY22 to 892.85 in FY23 to 1214.32 in FY24, and for the 4 months period, it was 413.64. The PAT margin increased from 3.63 in FY22 to a 5.45 in FY23 to 7.10 in FY24, and the PAT margin was 6.48 for the 4 months period ended July 24. Next. The balance sheet consolidated. The total net worth increased from in FY22 to 2897.44 to 3698.84 in FY23 to 5397.59 in FY24, and as of July it was 5813.80. The non-current borrowings was at 2935.78 in FY22 to 2766.33 in FY23 to 1990.40 in FY24 and 1530.18 in July 24. The total non-current liability was 3282.57 as of FY22, 3172.61 in FY23, 2411.16 in FY24, and 1949.75 as of July 24. The current borrowings was 4568.81 in FY22 to 5700.07 in FY23 to 6727.88 in FY24 to 7220 in July 24. The trade payables was 1476.64 in FY22, 1767.19 in FY23, 2009.45 in FY24, and 2102.16 as of July 24. The total current liability was 7376.07 in FY22, 8105.40 in FY23, 9584.83 in FY24, 10426.74 in July 24. The assets, the fixed assets, FY22 it was 4110.27, it increased to 5180.39. FY24 it was 6083.22. In July 24 it was 6258.72. The total non-current assets was 4732.02 in FY22, 5664.42 in FY23, 6449.24 FY24, 6680.47 as at July 24. The inventories was 4999.92 in FY22, 5523.60 in FY23, 5831.33 in FY24, 6000.31 in July 24. The trade receivables was 2906.51 in FY22, 3262.38 in FY23, 4043.60 in FY24, 4281.13 in July 24. Total current assets was 8824.06 in FY22, 9312.44 in FY23, 10944.34 in FY24, 11509.80 as of July 24. Next. The cash flow from operations was FY22 952.62, FY23 1459.84, and FY24 1712.08. There was a consistent improvement in cash from operations, and as of July 24 it was 859.35. Cash flow from investment, it was minus 1205.63, minus 1480.95, minus 1396.11, and minus 362.31. Cash flow from financing activities was 180.94 in FY22, 75.55 in FY23, minus 142.33 in FY24, minus 309.43 in July 24. The net cash flow was in FY22 minus 72.07, FY23 54.45, FY24 173.64, July 24 187.60. Next. The return on net worth increased from, as of FY22, from 16.73 to 24.12 in FY23. There was a small fall in FY24, 22.5, and as at July it was 7.11, which is for the 4 months. Return on capital employed, FY22 was 11.45, FY23 was 16.04, FY24 17.62, and July 24 it's for 4 months, not annualized, 5.90. The debt to equity ratio was FY22 2.59, FY23 2.29, FY24 1.62, and July 24 it was 1.51. The debt service coverage ratio FY22 was 0.82, FY23 1.03, FY24 0.90, and July 24 it was 1.06. Next. The current ratio FY22 it was 1.20, FY23 1.15, FY24 1.14, and July 24 it was 1.10. Earnings per share FY22 3.79, FY23 6.80, FY24 8.64. There has been consistent increase in EPS, and July it is for 4 months, it is 2.85, not annualized. Receivable turnover ratio FY22 it was 3.71, FY23 3.86, FY24 3.52, and July 24 was 3.68. NAV per share FY22 22.08, FY23 28.19, FY24 37.25, and July 24 it was 40.12. Yeah.
So I think moving forward, thank you, Mr. Murali. I think Emerald is constantly providing value to the customer through integrated solution and expertise, and constantly focusing on innovation, providing end-to-end service to the customers, always having customer as the focus of all activities. Tremendous thrust is given to R&D in order to improve the quality. We always focus on application-oriented approach, because industrial tires are basically application-oriented. We always provide the extra service that the customer requires, be it in product or service. And we also looked at not only the current need, but also the emerging needs of the customers. And we think ahead how to excite the customer. And we provide customized offerings, which probably, is the hallmark of Emerald. And our commitment to excellence is unparalleled. Next. Strengths that drive success: experienced, dedicated management team, manufacturing facility, completely, equipped to handle off-highway tires, the widest product range to handle all types of offering, a very well-balanced customer base across the globe, and qualitative products. These are the drivers of our success. Next. Just to give you an analysis of our strength, weakness, and opportunities. Strengths are leadership, skilled workforce, technology, R&D, and quality. The weakness is Emerald has to constantly keep in pace with the customer requirements in building capacities. Opportunities are plenty. There is a whole global market, privatization of ports and airports, increasing demand for automated operator, friendly material handling equipment, infrastructure and construction, and last but not the least, China plus one. And the threat is going to come from basically volatility of raw material pricing, competition from China and Sri Lanka. Sri Lanka is one of the major players in solid tires. And if we don't implement the projects on time, probably it will affect the organization. So these are the threats, and Emerald is fully equipped to handle the threats and the weakness by expanding, and is able to catch up with the opportunities that come in the market. Next. I leave it to Mr. Yash to explain.
Yeah. Thank you, sir. So company will give a broad view of the I think management have given the broad view of company. So I will give you the issue highlight. So the price band of the issue is 90 to 95, and the total issue size of Emerald Tire is up to 49.26 crore at upper price band. The total issue size is comprising of fresh issue and offer for sale. So company proposed to raise up to 47.36 crore at upper price band by issuing up to 49 lakh 86,000 equity shares, and selling shareholders offered up to 1 lakh 99,200 equity shares. The lot size of the issue is 1200. Anchor issue will be start on coming Wednesday, that is December 4th, 2024, and it will close on the same day. The issue will be open for public bidding on coming Tuesday, that is December 5, 2024, and it will close on Monday, December 9, 2024. The issue structure of the issue is up to 14 lakh 64,000 equity shares are reserved for anchor investor, and up to 9 lakh 76,800 equity shares are reserved for other qualified institutional bidders, and up to 7 lakh 33,200 equity shares are reserved for high net worth individuals, and up to 17 lakh 11 up to 70 lakh 11,200 equity shares are reserved for retail individual investors, and up to 3 lakh equity shares are reserved for market maker. Company planning to raise money for capital expenditure. In capital expenditure, company plans to increase its production capacity, purchase new plant and machineries, expand its storage facility for raw material and finished goods, expand its office requirement, and other general corporate purposes. That's it. Yeah, so as we already covered, company plans to raise money for capital expenditure.
Next.
Thank you so much for the detailed presentation. Now we will start with the question and answer session. I request all the participants to post their questions in the comment box. Thank you. So first question is from Mr. Piyush Chawla. What is the reason for sudden jump in trade receivables in financial year 24?
Murli sir, would you like to take the question? Hello.
Murli sir.
Murli sir.
Murli, are you there?
Sir, I guess he is not able to hear us.
Acha, okay. So, the important reason in 2024 for the trade receivables jump is because the company has increased its reach into many markets where we need to stock tires and sell. So, Emerald is, since it's handling the global market where we need to, whenever we export to the wholly owned subsidiaries, it is treated as receivables. So, and therefore, in order to handle the larger market, we need to stock more tires, and that is why the receivables have gone up. And if you could see, progressively, Emerald is trying to be, there were opportunities to open warehouses in other places, but it is now adopting direct exports to these markets, so that our plan is to bring down the receivables as we move forward.
Okay. Next question. Vinod Agarwal, how large is the size of industrial tires?
I think the market size is somewhere close to $9.4 billion. And this is industrial tire per se grows at 7% CAGR if you see globally. And India is catching up with that. So the market size is quite large, and India has got a big scope in this segment. Next.
Okay. Next question. Piyush Chawla, you have mentioned in RHP that export credit was restricted due to geopolitical situation. When do you expect to normalize export credit?
I think in terms of credit, Emerald is very stringent. The global situation is still continues to be volatile, and being cautious is the approach. So Emerald will not expand credit beyond its levels, because today what is important is to keep the cash flow intact. So Emerald's focus will be on cash flow. Therefore, I think the market to expand, change will take some more time because of the West Asia crisis as well as the Ukraine. And we are looking up to easing in those areas for the economy to relax. So right now, caution is the word.
Next question. Narayan ji, can you brief us how the proceeds from the issue will be utilized?
Chandruji?
Yeah, basically, we are setting up a state-of-the-art mixing plant. That's one of the. We are expanding our solid tire capacities. We got about. We will increase it by about 50% in the solid tires. The pneumatics also from about 11 tons will go to 30 tons. So overall, it's mainly into plant and machinery. A small for general purpose usage. That's what
I think the voice
we are
is
planning
breaking.
Yes.
The voice is breaking, Chandruji.
Yeah. Am I clear now?
Yeah, it's
Yes.
fine. It's fine.
We move forward to the next question.
Sure.
Next question, please. Ganpati TV. Any plan to increase domestic sales also?
I think, as explained, the domestic market is growing because of the entry of OEMs and also the China plus one. So the domestic, sales will constantly keep going up and exports will catch up with that. Now, today we are in 23% in domestic. As the volume grows in the domestic market, there will be a corresponding push for the exports also. But certainly the domestic sales will increase. And Mr. Ishwar, you can give your inputs.
Okay.
Yeah.
Next question.
If you look at the product that we are into, the segment that we are into, basically, in fact, we are making tires for equipment which are predominantly into the manufacturing industries, infrastructure, construction segment. And when you talk about material handling equipment tires, basically the major market for that is logistics and warehousing. So we all know that, in fact, government is now focused. They have come out with the national logistic policy, where they want to bring down the logistic cost of transaction from 13% of GDP to less than 8%. So there is a key focus which is happening in this segment, which is going to augur well for us, because we see the third-party logistics warehousing, segment.
Your voice is breaking.
How's their network?
I think.
Are you able to hear us?
Yeah, now it's better.
So the material handling segment is expected to grow at 13% CAGR. And since we already have a very strong presence in the domestic market, we are bound to grow. And as already stated, in fact, we find a lot of opportunity coming from the major global OEMs putting up their show in India. They are going to have their manufacturing base. And they're also looking at this as a supply chain base for the supply chain aggregate. So we see enormous opportunity coming our ways, and we are in for exciting times.
Thank you. Thank you.
Okay. Next question. Piyush Chawla. Company's average interest cost for financial year 24 is around 11%, and that seems slightly on higher side. Would you consider reducing the debt from general corporate purpose amount of the IPO?
Mr. Murli, are you audible? Okay, I think that's actually the plan. We plan to reduce our debt from general corporate purposes to improve to reduce that interest cost and to improve the efficiency of operations. You're right.
Next question. Kiran Gadge. What is the R&D spends for the last 3 financial years?
I think we have been fairly spending about around 3 to 5% on R&D of the total income. So this trend will continue. The company will keep focusing on R&D because that's the key to improvement of quality. And we'll be investing on improved laboratory facilities. We'll be working on a lot of new gadgets to test the tire before we deliver to the market.
Next question. Pratham Agarwal, when will the capex get complicated and revenue starts from it?
It will take about 6 to 9 months. Now we have already released the purchase orders. We are in the process of final negotiations. The mixing plant will take the longest time, but the capacities in the solid tire plant and the pneumatic plant will keep increasing as time goes by. So we'll put it into immediate use. So the entire capacity will not come at the same time, but progressively we'll keep increasing the capacities.
Next question. Next question, please. Abhilasha Kadam, what contributed to impressive surge in profitability margins and return ratios in past 3 years?
I think, this is a very good question. Emerald has focused from 21, 22, 22, 23. It focused on improving the top line. Now, when the top line increases, naturally, the company will tend to keep growing every year only in the top line. So what we believe is a continual development, grow, stabilize, and grow. We have been working on a lot of cost-effective measures from 3 angles. One is focus on higher margin products. There are products which give high margin. So we started utilizing capacity towards these high margin products. Secondly, we started looking at efficiency inside the plant. Now, as I told you, we are following the total quality management. So there is a constant thrust to see how we can kill cost wherever it is not required. So we have been working on cost reduction measures. Third thing, we have worked on improving the purchase efficiency. This is one area where we were able to show significant improvement. So a 3-pronged approach of concentrating on the value-added products. Like, for example, we were supplying tire. Now, tire and wheel assembly, then just in time. So every value addition brings additional revenue to the company. Then you work on reducing the raw material cost. Then work on increasing efficiency inside the plant. So all these 3 things combined made us improve the profitability.
Next question. Kayaveer, sir, what are the business risks with regards to current geopolitics, especially when many European vehicles manufacturers are shifting their manufacturing plant to USA for inflation in Europe due to war?
We are also moving towards the US market, So the answer is in your question. Also, many of the OEMs are shifting manufacturing bases into places like India. So that's another area why Mr. Krishna was all along telling that the domestic market, Mr. Ishwar also told you that the domestic market is looking very promising. Every day we hear of a sourcing company setting up shops, in Pune, in Gujarat, or in Bangalore, and we keep on receiving inquiries. So in terms of growth prospects, we see that that there will be a definite push for Indian products, and because we are there in this market for a very long time, when people come into India, they know that Emerald is a reliable supplier, and that's why we have had in the past few years people calling us to supply tire, wheel. In some cases, when they are designing a new product, we have been their consultants for giving the right kind of products. So that's how we have been taking care of the shift in the market.
Okay. Next question. Pratham Agarwal, going forward, what can be the revenue growth for the company?
See, the company, once it's implement its capex project, we can assume we can have a growth of 15 to 20% year on year. And this is something which will be followed by the market trends are favorable, it can increase.
Next question. Arundhati Kapila, please explain in detail business of our wholly owned subsidiaries in Dubai and Belgium.
See, as we explained to you, these are application engineering tires. Tires used in the environment has to be known before we deliver the tire. So, Europe is one of the biggest markets for our tire. Material handling is very, very prevalent. Even a small movement happens by an equipment in Europe. And in Dubai, they follow what the Europe does in terms of mechanization and everything. Now, if we have to become a global player, we need to understand how the tire is used and where the tire is used. The only way we could do is establish offices there to understand how these tires are utilized and what are the challenges involved in the product when we supply to a customer in an extreme cold weather and in an extreme hot weather like Dubai. Now, these are essentially required for an industrial company to grow in base. The world's biggest companies have done the same route to go to the advanced markets, understand what they require, and develop. And India, being one of the largest producers of rubber, and with the technology available in India, it is very important that if we need to catch up with the global market, we need to have operations, people sitting in these advanced markets to understand application, give the feedback to India, and we deliver a product that will meet their customers. So this is the main reason why we expanded. Secondly, customers who can buy a full container of product are not too many, but there are customers who require 3 pallet, 4 pallet tires, and this is a huge market in these areas. And if we have to catch up with the market, we need to stock the tires and sell it. The only way we could do it is go there, understand application, stock the required SKUs, and deliver them. So market expansion, and today Emerald is a global company because we establish offices in Belgium and Dubai, which is why we are able to understand what the global market requires and develop the products and supply to the market. Hope we have explained it.
Yes, sir. Next question. Prem Singhania, who are your competitors and how one can distinguish your company against your competitors?
See, there are competitors. The competitors, as far as India is concerned, we would like to say there is no competition because we are the only company to provide all the industrial tire solutions under one roof. Somebody makes only a solid tire, somebody makes only a pneumatic tire, somebody makes a wheel. We are the only company who can provide the integrated product to the customers. If you take globally, the world's companies are there: Michelin, Continental, and Trelleborg, Advance of China, GRF of Sri Lanka. There are so many players. But I'm glad to tell you that we are in neck-to-neck competition with all these global players because of our quality and our establishment of network of partners to deliver the last mile to the customer.
Next question. Amit Chandak, how are you meeting the ECG norms? Are we planning to do venture into recycled tires? Sorry, ESG norms.
Chandruji?
ESG, right from the beginning, we have been very careful of the kind of products we use, the raw materials we use into our production. Generally, if you look at rubber industry per se, rubber is one product where 100% of the material can be recycled. In the recent past, the government has come with our EPR norms. Those EPR norms, the industry generally has been meeting out. Even if you have scrap tires, the tires are generally can be used for making rubber mats. They can be used for making playgrounds. There are so many applications. For our purpose, the government has proposed EPR norms, and we have been able to meet the norms from the last 2-3 years. That's never been a problem for us. In spite of that, we are actually facing a shortage of getting recycled material. India is importing a lot of recycled material than giving out. The problem is collection of material and not the usage. Emerald Tires also is in the same boat. We can use material, and we use it to the extent of how the product needs. You can't keep adding full. It doesn't mean solid tire doesn't mean that you can add all the scrap material and make a tire. It is all the more difficult because it involves technically it involves a lot of torque and it carries a lot of load. So we use optimum quantity of recycled material into a product depending on the application.
Next question. Chaitali Dev. Do we have exposure to defense OEMs too?
I think we are participating in a lot of initiatives of the government to find application in defense. I think we are attending a lot of meetings convened by the Defense Department where for the tanker wheels, we are working to develop products to match their requirement. And we are working very closely with DRDO and ordnance factories to provide a solution for a lot of imports that they do currently. And a lot of them are in the drawing board. We will keep you posted of the developments as we move forward.
Okay. Next question. Kiran Garge. What is the revenue split from OEM versus replacement and how is the margin different between the two?
See, in the domestic market, the OEM versus replacement is almost 60-40. 60 is OEM, 40 is pneumatic. And we are replacement. We are trying to reduce the gap in a way that the replacement always gives a better margin than the OEM. But the retail market is very well spread. So you need to have an infrastructure to reach the after sales market. So that is why we are developing Emerald exclusive centers across India. And in the globally, if you see, we are 30% or probably 20% OEM and 80% replacement. Because at global OEM, we attend to small OEMs globally, testing the waters before we take a big OEM. A big OEM comes with a lot of tag, like consistent price for a year, just-in-time delivery. And if we are not delivering it, then there are penalties. So what we have done is to take a cautious approach. We have taken mid-sized OEMs globally to support, and the bigger OEMs we do in India because we have sufficient infrastructure to do it. Moving forward, one of the areas to which we are expanding is to cater to the global OEMs also. Naturally, volume margins are better in replacement, but the volumes are better in OEM. So an organization will have to make a proper balance of both OEM as well as replacement, which Emerald is constantly looking at. The bottom line is how to improve the margin. That's the bottom line on any transaction that we do.
Very well explained, sir. Next question is from Mr. Pratham Agarwal. Difference in margins in pneumatic types and solid tires.
I think between pneumatic and solid, there is there is nothing called difference in margin. We are in an application engineering market where a tire, when it is used based on the application, the tire finds its price. So we don't sell on a generic product. So in both the cases, there are good margin yielding products. There are also normal yielding products. The focus of the company is how to increase the higher margin products without sacrificing the market share. Because the same customer may need a normal tire plus high-end tire. So that flexibility is there. So we don't see virtually any difference between the margins in pneumatic and solid tires. It's application based.
Okay. I guess we have covered all the questions. Thank you, everyone. Thank you, Tirupati sir. Thank you, Chandrasekhar and Ishwar sir. And thank you, Krishnaraman and Shankar sir. All the best for the IPO. Thank you.
Thank you, madam. Thank you. Thank you. All the best.
Thank you.
Thank you, Rajnikant sir.
Thank you, Mr. Rajnikant. Thank you. Thank you, madam. Thanks a lot.
Yes, all the best.